And welcome back to all of you on Wizards of the Street. I'm still with Prashant Khemka of WhiteOak Capital. Prashant, we're talking about returns and your love for Indian equities. At some point, you threw your hat in the ring. You quit a steady and good paycheck at Goldman Sachs and decided to hang your hat. Was India the only choice, or would you want to run US dedicated money at that time? What was your thought process in, I guess, 2017?
So it was a big step after 19 years in corporate world. But as I said, I was very clear, had to do it at some point. And 2017 ended up being that time. Um, India, I felt like was rightly or wrongly, confidence wise, it is more like a bird in hand and something that I felt very confident about generating top ranking or peer group leading performance, which is needed initially to be able to build a investment management business. Down the road, I knew that at some point in time, we'll start, as we did earlier this year, an emerging market strategy, which I used to lead at Goldman as well.
Yes.
But initially to begin with, also the resources required to begin with, to start an India team could be, like we started with 9 people investment team. But to do proper service to managing an EM fund or a multi-regional fund, especially the way we invest very bottom up, you need at least 20 plus people team in my view. So which we have right now, nearly a 40-member team. So to begin with, could not have afforded or would not be judicious to build such a large team on day one.
Who were your early investors in your India fund?
So early investors, fortunately, were some of the investors that I had met with for long while I was at Goldman. But for some reason or another, they never gave me money at Goldman. But as soon as, to my very pleasant surprise, as soon as I started on my own, they were very willing and forthcoming to engage and and fortunately trust us with the money. That
That's
was
a
most amazing.
happy coincidence. But
Very amazing.
Prashant, you had a certain investment philosophy guiding you at Goldman based on past history. You now start White Oak. You have a certain personal philosophy. What were the differences and similarity in the investing approach that you followed at Goldman and that you're following at White Oak?
Actually, Rameshi, as I was saying, one thing very good about Goldman Sachs Asset Management was there was no uniform, top-down philosophy or process imposed upon everyone.
Boutique.
It was every team leader was, allowed the room space to build their own philosophy and process on their team and implement that. So that's when I came to India, it was very much like a boutique, no interference from the US. Particularly when you're small, there is no interference. Obviously, when you grow larger, New York wants to know what's happening and you're not going to screw it up and all that. But it was, fortunate in that regard. So I could design and construct the team and the team's philosophy and process and build a investment culture as I saw appropriate.
Prashant, a lot of people, fund managers, are disdainful of macro, the top-down approach. You called the piece macro shacro, but still, I'm going to quiz you on a few of the things. The first thing is the markets, at least till a few days ago, seemed optimistic that the inflation problem is solved, inflation numbers are coming down, the Fed slowed the pace of increase. What is your view?
I do think on this very particular aspect of inflation, that the worst is behind us. I do believe that the inflation last couple of years was sparked by the supply chain disruptions that followed COVID. So in March 2020, everyone was worried about demand destruction, which would cause supply glut. That's why
And the other
spot
thing
oil went to
happened.
negative, and the
Right.
opposite happened
Opposite
a
happened,
few
yeah.
few months later. So it was a supply disruption which continued for much longer because of COVID zero policy of China, as well as then another shock, supply shock, which was Russia invasion of Ukraine. And now gradually it is limping back to normalcy.
So
And
inflation will come down.
yes.
But uh, quickly in a summary, will globalization come back or has that also been permanently derailed?
No, I think globalization is very much there for good, and it is maybe a bit of a speed breaker in the interim. But for India, it's actually can be a very positive game changer of sorts because the companies worldwide are very keen to diversify their supply chains
From China. So
from
it's the India
excessive,
plus one.
absolutely, from excessive dependence on China. They want to diversify. India has the opportunity, and it should grab it with both hands, which it is doing so, but I think there's always room to do a lot more. It's an
So
opportunity
Apple
that
does
comes.
5,000 crores of iPhone sales. That telling sign to you?
That is certainly, from India's perspective, a very big positive. The opportunity size in front of us is, compared to that, is like tens of times, if not hundreds of times bigger if you look at the manufacturing sector as a whole.
So a services-led model that for some time had romantic feelings in India is not necessarily appropriate. We do need manufacturing at the end of the
No, no,
day.
sir. It's like, let, as they say, every flower bloom, or thousands of flowers bloom. Services would continue to chug along very strongly, but we can also have manufacturing. That's been a missing piece, something where we haven't really shown up over the past several decades. It is the opportunity that we should not miss.
Prashant, after 20 years, one thing I know you're not missing is an investment philosophy. If I were to ask you to summarize your investment philosophy on how you pick stocks, and give me an example, historical if you may, about something you enjoyed picking in India or something that you learned from picking badly in India, can you share that with us?
So certainly, it's very simple. And as I tell when clients ask me, there's no silver bullet in investing. It's like, the marathon has had 26 miles for thousands of years, and still you have to run 26 miles, and nothing really creative you can do about it. So in investing, we believe outsized returns are earned by investing in sound businesses or great businesses at attractive valuation. So the two key attributes we are looking for is strong business and attractive value. What we consider as great business are ones that have these attributes of superior returns on incremental capital, so going forward capital, a scalability, which is to do with growth, and management should be good both in execution and governance. When you have the opportunity for cash flow generation and scalability, you need management to execute. And when you find companies with all these attributes, you have to make sure you buy at a logically attractive
Price.
valuation price to make outsized returns from them.
Can you give me
So
an
that's
example?
so over the years,
Historically, anyway.
historically, um, so many of the names that we currently own are difficult to talk about just from a restriction perspective. But they're, without naming specific names, if I were to talk about, so financial sectors or IT services sector. IT services, if I take as an example, from time to time they get written off by the market. One of the things that market has for the last decade or so believed is that IT services sector is an X growth sector in India, because they think of or X growth sector because NESCOM and IT companies, they guide in dollar terms or constant currency terms, which are like dollar equivalent.
Yes.
So they talk about 7 to 8% growth. Now, in India, 7 to 8% growth doesn't appeal to anyone.
Doesn't wake
If
up
you are,
anyone.
yeah, if you are less than double digit, you are no growth or slow growth company. But 7 to 8% dollar
Dollar
growth
terms is.
equates to low double digit to low teens kind of rupee growth, right? And you can't label the entire industry as slow growth, because it's a trillions of dollar industry with hundreds of or thousands of players. So a good execution machine, which is small or mid-size, even the largest of Indian companies are small or mid-sized by global standards,
Will
given the
continue to
size of the pool.
compound.
Yeah, so the compounding possibility is tremendous. Yeah, and then they're available at cash flow based valuations, which are far more attractive than anything else in the market.
Fair enough. There's a movie called Dawn, which I know you like, and there's a very famous dialogue in Dawn which says, "Dawn ko pakadna mushkil hi nahi, namumkin hai." Would you say the same about India right now?
I would say at any point in time, any market, including India, and most specifically India, I would say when it relates to, like, a lot of people talk about Indian markets being overvalued and whatnot. So basically, that's a market timing statement that we'll buy it when it's undervalued. But this has been a common refrain amongst foreign investors and oftentimes amongst Indian investors as well.
And you miss the
That
bus.
and you miss the bus. So in that context, I often say, Don still gets caught in the movie, but to catch the market is not possible.
Yeah, I mean, when you started in 1985, the Sensex was, I guess, under 500. Today it's
Absolutely.
closer to 60,000. Prashant,
Absolutely.
we have some fun normally at the end of the show. We do a rapid fire. So I'm hoping you'll agree to participate in that.
Absolutely.
So when I say to you, Herb Ellers, what do you say?
Leader and business builder.
If your child asked you to recommend an investment bank to work at today, which bank would you recommend?
Investment bank or investment firm?
Investment firm.
Investment firm, I'll say WhiteOak if you get hired on the team.
Okay. There's no nepotism there, right? He has to be
Only if
hired.
you get hired by the team.
Okay. The best investment book you've read.
Valuation by Copeland.
Okay. The must-read newspaper magazine in the investment world.
Annual reports.
Okay. That's what your grandfather taught you. If you could invite any two investment professionals and any two cricketers, living or dead, to dinner, who would you invite?
Clearly, Kapil Dev and Tendulkar for
Okay. So you remember the
from
85
cricket.
World Cup, I think, still. Huh?
Absolutely.
Okay. Investment
And
professionals?
investment, well, I'll do it twice with Rakesh ji.
Really? Okay. Very well said. Hank Paulson or Manmohan Singh for dinner? Hank Paulson, of course, ran Goldman Sachs.
Absolutely. Unfair to Hank to be put up against Manmohan Singh, but Manmohan Singh.
Okay. The Indian promoter that you really admire?
Radhakishan ji Damani.
Thank you. Indian stocks over 1 year, higher or lower?
Higher.
Estate or inheritance tax, is it likely to come by 2024?
Hope not.
The one sector in India that you're very bullish on over 1 year's time frame?
IT services.
Thanks. My guest is fond of saying investor returns are a function of time in the market rather than timing the market. Well, we can keep debating that, but I know I'm not debating how grateful I am to Prashant for his time today, for stopping by and for chatting with us. Thanks, Prashant. And we'll see you next week on another episode of Wizards of the Street. Bye for now.
Thank you, Ramesh ji. Entirely my pleasure.